So recently I just closed these two trades. So you can see here, this is about $1,400 and this is $700. This was a nice $2,100 added to the account and a nice boost to the account. And the secret of why I closed these trades was this candle pattern here. This let me know that a breakout was coming. So in this video, I'm going to walk you through the exact candlestick patterns that I trust every single day so that you can start to read the charts like a pro, catch moves early, and grow your account with confidence. The way that I do this, I haven't seen anybody else on YouTube talk about this. So the first thing that you need to know when it comes to trading these candlestick patterns, and this is going to shock and surprise you, is that candlestick patterns by themselves are absolutely useless, especially if you're a beginner. Just learning a bunch of random candlestick patterns is probably the worst thing that you could possibly do with your time. Now, the thing that is much more important is understanding the market structure and the trend properly, and then understanding these candlestick patterns in context. So that's what I'm going to be teaching you in this video, is to understand the market structure and the context of the candlestick patterns, and then we're going to talk about the actual candlestick patterns. But this is something that you really need to understand, is learning a bunch of random candlestick patterns by themselves absolutely worthless and will not help you. So the candlestick pattern that I look for and I use every single day, this is going to be called an inverse liquidity break and retest, or high volume node break and retest. And if you don't know what this means, don't worry, I'm going to break it all down now. So the first thing you want to do is you want to go into trading view here and you want to type in the volume profile, right? So the fixed range volume profile. Now, because I normally trade in London, what I'm going to do here is I'm going to drag this from 401 EST. So this, for my Americans out there, that's 1601 to 929, right? So 929 is going to give you this nice volume profile here. And you want to make sure that your chart is also set in EST just to be 100% safe. Now you can see here, let me actually show you my settings so you can see how my settings actually look. And this is the style. So you can just pause the video there and look at that. But what you want to make sure you do is when you look at this volume profile, what you want to do is you want to look for high volume nodes, or these bars here. Put simply, these bars here on the side, these green bars. When you see a large area of volume bars, these green bars, this means that lots of liquidity was traded there. And if you don't know what liquidity is, put very simply, liquidity is just an area of interest between buyers and sellers in the market. So when you see lots of activity at a particular area, generally speaking, you're going to see lots of a strong rejection or a strong support at high liquidity zones. So this is why we pay attention to these high liquidity zones, because when the price comes to these areas, you generally can expect to see some kind of sharp reaction. So again, really simply, liquidity is just an high area of interest between buyers and sellers in the market. You want to be able to identify these high liquidity areas because this is where the moves take place, which is why we use the volume profile. So once we actually identify these high liquidity areas, I like to draw a box around these areas. So you can see here, I've identified this big volume node here. So I just drew a box around the area, and then we can obviously, there's like two bigger high liquidity zones here. I'll just kind of group these into one here like this. So this is also a high liquidity zone. Once we actually draw this, like how are we actually using this to kind of shape up our trades? So what I told you is that I look for is this called an inverse liquidity break and retest. So you see here that we've drawn out this area of liquidity, and look what happens when the price, it kind of is coming up to this area. You can see we break through, and then look what happens though. We kind of chop around and then we break down through this area. But we retest. What I'm looking for is when we come through an area that was acting as resistance, and then we come back and then we flip that resistance into support. And to make it even simpler so you can see a little bit easier here, you can see that this area of liquidity that we identified, this acted as an area of resistance. So we came up to this high liquidity zone. And again, once we come into these high liquidity areas, we generally see that there's a strong reaction to these areas, right? And then once we reject it from this liquidity zone, the price tried again to push through. And then once we flip that liquidity from resistance to support, then I'm looking for the break and retest. So this area here, once we actually broke through this area, I'm looking for the break and the retest of that area to push forward. So that's why we call it a liquidity inverse break and retest, but you have to identify the liquidity first, right? So if we look at that on the candlesticks, how does this actually look up close? So you can see here, again, this area of liquidity that we identified as resistance, we rejected from it, and then we pushed through with this candle here. So we broke through. So this will be the break here. We call this the break. And then we retested this zone here, and then we pushed forward. So my entry here would have been, I was looking for the break, and this would have been the break here that you guys can see here. And then we retest here, right? And another thing that you want to make sure, another thing you want to make sure that you pay attention to when you are looking at this is you want to look for long wicks as well. Again, I don't look for every single little candle pattern or anything like that. But when you see something like this, long wicks, and what do we mean by long wicks? You see that this candle here has this kind of like long body here. This long wick, this long line at the end. This means that the bears tried to push the price back down through this area, and you can see the bulls just bought it right back up and pushed it right back up through the area. So that just means that the price is reacting strong to a particular area, right? So again, you want to pay attention to when you see long wicks and also big bodies. And we'll talk about that here in a second. But once we broke and we retest, either my entry on this trade would have been on the actual retest here. So I would have either entered on this candle, which would have been a little bit more aggressive, but I would have waited until this candle closed, or I would have entered on this candle, right? So let me actually take some of this away. So look, we break and then we retest. So I would have either entered on this candle, which was a little bit more aggressive, or you can enter on this candle. And the way that I enter my trades, I'm a one-to-one risk to reward scalper. So I would have either put my stop under this clear level of liquidity, because if we break back down through that level of liquidity, that means that what I was thinking for the setup was incorrect. So I would have either put my stop right under this level of liquidity, or I would have put it at this swing low here if I wanted to just give it a little bit more space here. So let's just say 1250, and let's say the entry would have been at this candle close here. So it would have been like around 14 points, right? So you can see here, also 14 points. So obviously that trade would have worked out. We would have entered right around here, and our entry would have been, that would have been a little bit longer trade, to be honest, about 30 minutes here. But you see that trade would have obviously worked out. We would have had 14 points on that trade. And then obviously the trade would have pushed all the way up here to 40 points and beyond. Now, to be 100% honest, like, you know, hindsight is 2020. It's easy to say, you know, I would have held the trade to 40 points. Me personally, the way that I trade, I don't believe that I would have held this trade all the way to the maximum extent here. What a lot of people like to do is they will take like 80% of their position off, like at a 1-to-1 or whatever their first target was, and then maybe hold for some extra contracts. But realistically speaking, this would have just been a regular 1-to-1 trade for me here. But you can see that's how we actually we understand the market structure, and then we look for these candlesticks and these patterns in the right context. If you're just using learn a bunch of random candlestick patterns and these kind of things in the wrong context, it's just absolutely not going to help you. But you may say, okay, Dante, hindsight is 2020, but let's actually see some example of some real trades. So I'm just going to go back to exactly what I was, the trades that we talked about in the beginning of this video, and just show you how this works. We actually come back here and we look at this trade. This was the exact thing that I was seeing when I took this trade. I can't show you it live on the charts because the contracts have updated now, so the levels are messed up. But luckily, I do have the screenshot of exactly what I was seeing when I took this trade. So if we look here, you can see that I drew this box here, like I just showed you in the example, to show the large liquidity zone. And this was also in confluence with the CPI high as well, but we just had a lot of liquidity built up in this area. And if we look here on the chart, you can kind of see how the price was reacting to this level as well. You can see here. So this was a clear line of our area of liquidity or interest that we wanted to pay attention to. And then it's very, very simple. You see the price, it comes down. This price acts as support in this liquidity zone, but eventually what do we do here? We break down through this liquidity zone here. And you can see on this candle, so if we zoom in here, on this candle, we break below the liquidity zone. You could kind of say this was a break and retest, but this is when we truly broke below this candle here, truly broke below and closed below this liquidity area. And then what happens? We retest back into this area, and then we super nuke down to the downside, right? So we break below the liquidity level, we retest, and then we continue downward, right? So this is exactly what we see. The liquidity flips from support, closes below, flips to resistance, we retest into that resistance, and we confirm, and we push back down. Now my entry was actually here just because I believe at this area here I just wasn't paying attention to the charts, and I couldn't get into this trade, but I re-entered it on the second time that it set up. Basically it came back into this liquidity area, and I was just waiting for the price to, you know, confirm a direction again back at the liquidity zone. So we broke back down, and then the target was here. You can see the opposite liquidity zone that we bounced off of, and you can see how these liquidity areas kind of really matter, right? So again, we look at this candle pattern in context. So the thing that's really important is you just learn how to look at the market structure properly and liquidity properly, and then we look for these candle patterns, these break and retests, or you can just choose a couple candle patterns or entry models that make sense for you in context, and then these things actually work and can really give you an edge in the market. So I just want to kind of reiterate that, you know, candle patterns by themselves are really truly not super duper important, and understanding the structure on a deeper level is what you really want to really kind of get into. So especially if you're a beginner. So if you want a 100% free trading course, go to dantetrades.com/free. I'm just doing it for free because I want you guys to share my stuff. I want you guys to enjoy it, give me feedback, and just make it bigger so I can kind of grow the channel, grow the influence of the videos and the education, and just kind of get this stuff out there. So it's a $200 free trading course. I'm always updating it all the time. So again, go to dantetrades.com/free to get that. Like and subscribe, do all that. And I'll see you guys in the next video. Take care.